In Germany, there are more than 1,600 banks, registered banks. That's everything from the largest one, from Deutsche Bank, to really small regional Sparkasse, and even well below that. I'm pretty sure you know that number. In the UK, we have 370 banks, and in Spain, we have 206. But I'm not here to tell you that those numbers are too high. I'm telling you that there's something else that's really baffling me. Within those 3 countries, there are very few banks that are present in all those 3 countries. In fact, there are few banks, especially few retail banks, that are present in more than even one additional market. And we all know one industry which is extremely different than that. It's B2C tech companies. And if we think about it, that while tech companies are becoming slowly more like banks, where compliance and regulatory topics and data privacy is becoming more and more important, and a company like Facebook almost feels like a bank in comparison to considering the size of its compliance team. And on the other side, large retail banks slowly becoming more like tech companies because they have to invest more and more into IT infrastructure. The quality of their product and the quality of their customer experience is as important as everything you knew about banking before. And if you consider those 2 industries then in comparison, it's really baffling that on the one side you have technology companies where the same brands offer the same product in all countries across the world, addressing exactly the same customer needs. And on the other side, you have retail banks where we can't even speak about the national business. It's almost a regional business, where, especially in Germany, where banking is more fragmented than almost any industry, where a bank, essentially many banks, stop their financial services right where their zip codes end. And the big question is, why is that? Well, there are reasons for that. One of them is historical, because as you all know, historically banks were influenced heavily by governments. In fact, many of them were owned and founded by governments. And that's why it made sense that back in the days that banking services were really focused on a country and were really focused on maybe a county. But that changed quite a lot in the past decades. The second one is branches. We all know back in the days, there was a time when branches were one of the most valuable assets of a bank. A bank with a lot of branches was more attractive to its customers. A customer very often chose a bank based on the proximity to the next bank branch. But in a time when 7 out of 10 millennials say that they would rather go to a dentist than to their bank branch, that time is clearly over. And the third and really important reason is regulatory topics. Because retail banking is rightfully one of the most heavily regulated industries in Europe. And that's right. It's important. It's important for the trust of the customer. It's important for the stability of financial markets. However, regulations changed a while ago. Thanks to the EU, we nowadays can offer through passporting financial services across the entire EU with a single bank license. And regulators across all countries collaborate with each other more than ever before. So in fact, regulators are ready for the next disruptions. Interestingly, a lot of European retail banks are not. And so you wonder, if you compare technology companies with banks, then you realize banking, in reality, has never been a truly global business. Despite the fact that there are a couple of really strong bank brands, in reality, especially when it comes to retail banking, it's at best a national business. And especially in Germany, it's more of a county-based business. But this is about to change. Because what's likely going to happen in the next decade is the emergence of truly European, potentially even global banks. Because in a time when customer experience is more important than branches, and customer experience in a digital product can be scaled quite easily across the world, whereas branches are clearly not, this is changing. And what's interesting is, especially if you think about just a month or 2 months ago, that we really have to wonder, is 2019 really the year where we speak about how to build a strong national player, a strong German bank? Should that really be the discussion? Or should, especially in the light of the upcoming European election, should we rather start talking about strong European banks? Banks that are not associated with one country, not associated with one culture, but rather associated with a great customer experience, a superior product that addresses a truly transnational, truly global banking need for just much better banking. Thank you. Thank you.
And you even allow us possible Q&A, which is almost a first. We had one lady before lunch who gave us a bit of time. Do you have questions? If so, please raise your hand. I think by now we do have a microphone in the room, so we can hear you. And there's a gentleman. Do we have a microphone? Do we have a microphone? If not, you're close enough. Ah, she's on her way. If you could just get up so we find you more quickly.
Thank you for the opportunity. Looking at the challenger banks, the two biggest cost-saving opportunities are closure of the branches and no legacy especially from IT. Is there any other things that you see from a challenger perspective that can be saved in comparison to incumbent banks?
I think the biggest opportunity is not only saving money, but rather spending more on a better product and then being able to spread those investments into product development over a much bigger addressable market. Because if I think N26 is a bank with a German banking license. If I think of an addressable market of, let's say, 60 million people that would have such a need because they are in that age, then it's a much smaller addressable market than if I think about a global market. Especially if we are now entering the US, we're entering Brazil and also further countries. That just offers a much bigger opportunity to really invest in where it's necessary to invest. And that's why I also believe that banking will become much more like the technology industry, is because in the technology industry, these big tech companies managed to invest so much into their product that they just were so much better than any of the competitors that people didn't even think about, should I use Yahoo rather than Google and other Alta Vista, Fireball, like the old search engines that you might still remember.
All right, one more question. We would have time for one more, if you're fast. A little bit of sports here, but microphone is on its way.
So you're talking about one Europe, but thinking about like the different cultures and different markets, do you think the needs are the same on all markets? Because it makes it very hard for one bank or branch to have it like on our one Europe. And the needs, the technologies are like, as we heard before, in Germany we love the Bargeld, yes, the cash. But in UK they love the credit card, they love their NFC, like their contactless. So it makes it different and hard. What do you think about it?
Needs of banking are the same globally. However, what's different is indeed that essentially what people are using nowadays. In fact, what we believe is that in 10, 15 years from now, banking needs and banking habits will be much more aligned globally than it is right now. Right now, you see, as you said correctly, Germany is really passionate about its cash. On the other side, France is really passionate about checks, as is the US. Different types of checks, but still super passionate about it. On the other side, as we know, especially China and some other places in Southeast Asia and Asia are super excited about mobile payments. But the main reason for that is not the difference in needs, but rather the difference of what habits were adopted. And since the market was so fragmented across the entire globe, just different types of habits appeared. I'm not saying that in 10 or 15 years from now all those habits will all be aligned, but I think they will be somehow closer than they are right now. And the big opportunity for banks is here to build one global product that needs a certain share of adaptation, so let's say 10, 15% of modification to really serve the local need, that French and Americans can still use checks, for example, which we will not be able to convince them to not stop doing. And at the same time also offer cash-focused services in Germany, but still 85 to 90% of the product can still be the same.
All right. Thank you. And you, Georg Hauer, you can stay on stage because I believe you're part of the next panel.
Yeah.
And just to mention, I mean, it's hard to kick a habit, as we all know, unless there is necessity or really great incentive. And I'm sure that is something for the industry also to bear in mind. So you're part of this panel. You're the first on stage, so you can pick wherever you would like to stay.